Geoff, always good to have you on the show and get your perspective. This time we're talking about crude oil prices. How significant, Geoff, is this downward revision on global oil demand that we've seen from OPEC consistently? It's been cut down for 3 months in a row now.
I think it's symbolic because, of course, the Chinese economy is still weak, and despite the excitement of the equity market recently, there's still not a lot of evidence or clear signs of what we're going to get on the fiscal side, which would allow people, I think, to get more bullish about the Chinese economy. So I think that is obviously a factor that's contributed to this reduction in the demand forecast of OPEC. Also, at the same time, Europe's quite weak as well. I think that's playing a role. And don't forget also that Saudi Arabia not long ago kind of gave up on their $100 price target for oil, and I think that is tending to keep prices under control, as well as therefore accepting that you're not going to get a big demand increase that pushes oil prices up to that level. Now, having said all of that, these are pretty small adjustments. We're still talking about a nice increase of as you say, just under 2 million barrels a day in 2024 demand. That's the forecast currently, and 1.6 million barrels per day in 2025. That's still a nice increase around my math is right here, around the 1.5% to 2% level per annum. And I think that's still shows the oil market is growing. The final point I'll make is, in the introduction here, is that we've seen Brent for the last 6 weeks or so trading between 70 and 80. Last week it went to the top end of the trading range because of the Middle Eastern crisis, political crisis, and terrible events going on over there. And all we've done now is pull back a little bit towards the center of this trading range. So I'm not going to get all that upset about this. I think it's a logical move given all these factors.
Talking about these factors, like you said, this could be fairly symbolic, but the biggest uncertainties at play seem to be what's going to shape Chinese demand. And the kind of demand outlook is weighed by what China is going to need in times to come. Also, a major part of it is the shift to cleaner energy. Apart from these, which are the major factors at play, at least in the long term, that would make crude oil prices move?
Well, let's talk about China for a moment. And obviously, China is making a very, very big move to go towards green energy, and they're making more progress than a lot of other countries. But I think at the margin, day by day, what I think is putting the oil price under pressure, at least as far as the Chinese economy is concerned, is the very, very disappointing growth numbers. And I think until we get some significant fiscal action, I've even written about this morning, until we get some significant fiscal action by the Chinese, people are going to remain skeptical about the Chinese economy short term, and therefore that will have a negative impact at the margin on the price of oil. I think the other factors I would be watching very carefully is how strong does the U.S. economy become? It's growing very nicely, probably around the 2.5% to 3% range. And then, of course, I think above all, I think on the upside also for prices, or potential upside for prices, you have to see how this Middle Eastern crisis plays out, because in the event that Israel strikes the oil facilities in Iran, I'm not saying they will, but were they to do that, that will reduce the output coming from Iran, which is a major exporter currently, and that would tend to put a bit of a floor under the oil price. So I see right now there being economic factors both on the push and pull side. China's weak, Europe's weak, US is pretty good. And I think you've got upside potential risk anyway until we get some clarity over a settlement as far as the Middle East is concerned.